US markets were subdued, and that is something that we are seeing in the Asian markets as well.
The poll numbers, it's expected to be 5.1 for the fourth quarter.
On the lower end, the Nifty should not break. I mean, if there is a bit of a profit taking which emerges, should not break 18,420.
8% increase as far as high-grade coal of grades G2 to G10.
Mauritius Holdings is looking to sell their entire stake in SDFC Life.
We now reported a net debt of close to 1,200 crores.
The first tick on the index on expected lines is on the red side, so 45 points lower on the Nifty.
The offline pharmacy, it did really well. Clocked in margins of 8% for the first time.
Profits also in line with estimates at 330 odd crores.
Last 3 years, entire focus of the bank would be in terms of customer centric.
The mid-caps are outperforming. The frontline indices have seen some profits being taken off.
In some cases, the concentrated holding have been the same for many years.
The overall average has been 11.82 lakh tickets in a day.
25% rally that we've seen in the last 3 months, and it's very close to its 52-week high.
Banks are taking it on the chin. The Nifty is now below that 44,000.
Well, that was the day so far and how we've panned out this Wednesday. You're with us here on a fresh new edition of Closing Bell. We're coming to you from the CNBC TV 18 Motilal Oswal studios. I'm Prashant, with me, my colleagues Rima and Mangal. Guys, hi.
Hi, good afternoon. It just looked like the markets were going to break 18,500 about 10 minutes back, but there has been a little bit of a recovery, particularly the mid-cap index. Pull that up, and it's about a 100-point push up on the mid-cap index just in the last few minutes.
That's right, Rima. I mean, actually, the Nifty is also picked up. I mean, from 2010 or so, it's pulled up nicely. I mean, it's about 30 points, 40 points, but for what it's worth, it's a comeback of sorts. At least the first one, meaningful one that we're attempting. Again, on the Bank Nifty at about 2010, we were at about 43,850, and we've recovered about 100 points in the last 20 minutes or so. So a little bit of pullback is what we are seeing at this point in time. Otherwise, starting that sell-off after 10 o'clock, markets have been in a flattish kind of zone, plateaued out, not really moved anywhere. On the Nifty, I think the levels remain the same. 18,420 is the one which I think should hold I mean, of course, there is a 20-day, but that is some distance away, and this is a moving average which is closer to where we are right now. We got to within 100 points of it, but and with this recovery in the last 20 minutes, some more distance. The Bank Nifty is seeing the bigger cut of the two indices. There, the 20-day moving average stands at 43,705. This is as of yesterday's close. It would have moved up a little bit with today's session. 1:1 advanced decline ratio, I mean, actually slightly favoring declines the last I checked. And across the board, you look at the global screen, it's all negative. US is down about 0.25%. European stocks are down 0.5%, 3/4. And Asia was largely in the red as well. Rima.
Hi, but the truth of the matter is the markets have had a phenomenal one-way rally. Just towards the end of March, the Nifty was below 17,000. It was a 16,900 and something, and we almost went to that 18,700 mark yesterday. So in a span, pull up the 3-month chart and you would see what a phenomenal one-way rally we've had in the last 2 months. So the question is this just routine profit taking? Because we did scale all-time highs on the Nifty Bank and on the mid-cap index. So typically, the first time when you get to those levels, there is a little bit of profit taking, which is quite visible. That is the rally I was talking about. Pre-March, towards the end of March, the Nifty was sub 17,000 levels. So perhaps it's just a little bit of profit taking that's visible and not a major reversal. As Prashant pointed out, the global backdrop is subdued. You had deep cuts of more than 1.5% in many of the Asian markets, and Europe too right now is down close to about 0.5% on the key indices. The Nifty Bank is underperforming. The Nifty Bank has a cut of more than about 500 points, and it's trading below 44,000. It's Axis Bank, HDFC Limited, HDFC Bank, which is putting pressure, and the other two heavyweights, Reliance Industries and ITC. Reliance Industries has been quite the drag. Year to date, Reliance Industries has underperformed the Nifty by nearly 5%. It's still about 12% away from its 52-week high levels as compared to the Nifty, which may be 1.5–2% away. So Reliance Industries has been an underperformer, in this rally that we've seen, though it has moved up, not quite commensurate. So today, Reliance Industries is down 1.5%, and ITC too is dragging its feet. So that's exerting pressure on the benchmark.
That is, but it's an interesting thing because ITC over the last couple of days, we've been talking about how it's been a big contributor to the FMCG index. But right now, if the director pulls up both the FMCG index and the ITC stock, you would say that the ITC stock is at the low point of trade, while the FMCG index has moved higher. And why is that? Because the non-ITC components of the FMCG index, which is HUL and the likes of Britannia, Varun Beverages, all of them, they're seeing a bit of a pickup right now. So there you have it. The FMCG index has moved higher, even as the ITC stock is lower. Why is that? Because you pull up the intraday chart of HUL, that's moved higher to the high point of trade. You've seen a big move come by on a couple of other consumption names as well. Tata Consumer too has moved higher, as has Britannia. Britannia, in fact, once the clock struck 2, we saw something happen to Britannia. That stock too has moved to the high point of trade. So that's something we'll be watching out for. But, by and large, it's not been a bad session whatsoever for the Nifty, notwithstanding a 100-point cut, because we've been talking about how on the long side there were a lot of excesses which were built. And now that the market's giving back some of those gains, it's bouncing back from important support zones as well. We've seen a bunch of options which were rather active. The 18,550 call and 18,600 call, both of them will come into play tomorrow because it's the weekly options expiry. Those who are writing the 18,550 call are hoping for the market to not go past that 18,600 mark. If it does go past that, we will see a fair amount of short covering. Bulls are pretty steady at the 18,500 put. They are telling you that 18,450 is an important mark of support, 18,450 to 18,460. And the put-call ratio, which was at 1.3, signifying overbought levels, has now moderated to sub-1 levels, closer to 0.92. So that gives some room on the upside for the markets to breathe as well. And the Nifty Bank too bounced back from 43,850. If you look at the 44,000 put out there, it has a premium of 170 odd rupees. So that's telling you, 43,820 to 43,850 is an important support zone. So yes, there has been profit give back, but from lower levels, we've seen a bit of a bounce as well. The mid-cap index, which is outperforming, will be in focus over the next 40 minutes or so, mainly because it is the weekly options expiry for the mid-cap index, which has moved to the high point of trade. But this weekly options expiry does not see that kind of volume. So let's see whether there are some volume pickups that we see in the last 30 minutes.
All right, Mangalam, so interesting data there. Thanks very much for that. Let's quickly tell you what's lined up here over the next 60 minutes or so. KRBL has dipped after its fourth quarter margins contracted 530 basis points, while Suzlon Energy is surging in trade in the back of strong numbers. We get you management excerpts for both those conversations in just a bit.
Apollo Hospitals management says they're looking to dilute stake in Apollo 24/7 and raise $200 million. The stock is trading flat. Key excerpts coming up on the show. The other stocks on our radar from the earnings space are Torrent Pharma and Tega Industries. We'll get you the earnings fine print. And we'll also discuss the way forward for the markets with Ajay Vora of Nuvama Asset Management. All this and much more in the next 60 minutes.
Okay, well...